Ryan Cohen recently had an interview over on Squawk Box, and he also did an interview on Fox Business with Charles Payne. Guys, this video is probably going to be long, but it's well worth it. You want to hear every word Ryan Cohen has to say, and I also have a full breakdown that I want to give you guys on the notes that I took when listening to both of these interviews and give my personal opinion on that as well. Now, normally we play both interviews and then I give the breakdown and what I think about them, but I kind of want to talk about it first and then roll the clips for you guys, since a lot of you actually already watched the interview, or maybe some of you guys already have seen the interviews. So I want to talk about the breakdown. That way you can listen to it, hear my opinion, and if you want to watch the interviews, which I highly recommend, and if you've already seen them, I recommend to watch it again. I'm going to roll them after I talk about it very briefly. Watch until the end, like the video, subscribe to the channel, and turn post notifications on. First things first, guys, Charles Payne. Many of you who don't know, Charles Payne has been one of the, we'll say, good interviewers, or sort of on retail side and not mainstream media, scummy, just trying to basically bait people into, or Ryan Cohen into, bad questions is not something that Charles Payne does. He is normally on the retail shareholder side, and I do believe he's had a position in GameStop as well. And we're going to talk about this one first because I find it more interesting, the questions that he actually asked Ryan and how Ryan answered, because one, this guy's a better person to interview Ryan, and Ryan knows that. And then on top of that, he also asked questions more so towards shareholders, short squeeze, and things that we more so care about. But both of them are very important. And we really need to talk about Ryan Cohen's attitude towards this guy on mainstream media on CNBC. So first things first, Ryan Cohen on the Squawk Box interview, which is not Charles Payne. This is the mainstream media guy, the CNBC guy. Here are some main key points that he said. One, Bitcoin is a hedge. He sees Bitcoin as a hedge against inflation and global money printing. He also states that GameStop has a unique strategy. This is not a micro strategy, and in fact, it is not a strategy that follows anybody else. And he also states, Ryan Cohen does state in this interview, we will invest in any or all cryptocurrencies, so none of them are canceled out. Dogecoin's not canceled out, Shiba's not canceled out, and most importantly, in my opinion, Litecoin and Ethereum are not canceled out. So it's not just Bitcoin as the hedge against global money printing or inflation, or their only investment that they will make. Again, it's a unique strategy. He also says that there is opportunities he won't speak of with trading cards and crypto. So he was asked this question, you'll see in the interview. First thing about this entire interview, Ryan Cohen didn't give him much. This guy was asking questions that some Ryan Cohen didn't like that he was asking. And then also Ryan Cohen was kind of just giving him like one word answers, like basically saying to like, F off, let's get this over with. In my opinion, this is what I see during the interview, and you'll see that when we watch it. But basically the guy was trying to ask, hey, like, what's the future then with these trading cards and crypto? Do you see a world where they come together and they do something? And Ryan Cohen said, maybe. And, the guy wanted more on that. He's like, well, can you give me more? He's like, there's opportunities. And that was basically it, right? He's not saying what GameStop is going to do or the opportunities that are there, especially to mainstream media, because we know whose side they're on. Now, Ryan Cohen said that GameStop's now a much smaller company and is positioned much, much greater. So they've closed brick and mortar stores. They have came down to a company where they are profitable and only making money off of what makes money, and they closed unprofitable stores. Now they're a much smaller company, but they're positioned much, much greater because obviously their investment and stuff like that. Now, Ryan Cohen does emphasize he takes $0 in compensation, and he says that shareholder value is key. A lot of these things we've heard before, but one thing you can take away from this is that Ryan Cohen didn't want this interview to keep going. And this isn't it, right? He also says that the guy kept asking Ryan Cohen, hey, like, what do you think about Apple? You think you still investing in Apple, Netflix, and whatever else he mentioned? And Ryan Cohen said, yeah, I'm still invested in Apple. And then the guy's asking about Apple, and Ryan Cohen says, well, yeah, they're gonna catch up in AI, whatever. And then the guy's like starts asking about Ryan Cohen's Alibaba investment. Ryan Cohen basically says, we're supposed to be talking about GameStop. Like, what are you doing? And that didn't go the right way. I feel like the interview was kind of cut short, in my opinion, low key. And then Ryan Cohen basically just gave them nothing. Yes, he did sell Netflix. That's something we can write down as well. But this is basically the basic breakdown of the first interview. Now to get into the juicy stuff where he talks with Charles Payne. Let's talk about the breakdown that I have here. So there's a right off the rip, we're going to jump into the notes with the Charles Payne interview. We're going to play both of them back to back, starting with, I don't know. I feel like I want to start with the Charles Payne, but we covered the notes on the other one first. We'll start with the Charles Payne interview to play it because I think you guys will enjoy the answers and questions more. But then the second interview is just as important because it shows like what's going on when Ryan Cohen's on mainstream media. So during the Charles Payne interview, here's a couple things we can note. GameStop in 5 years depends on macro conditions, Ryan Cohen says, which I thought was very interesting, and that's why I wrote it down. He was asked about where do you think GameStop's going to be in 5 years, and one of the points he made was depends on macro conditions. Then from when Ryan Cohen called what he did within 4 years ago, you can expect what happens in another 5. So basically, he was asked, where's GameStop going to be in 5 years? And Ryan Cohen said, well, yeah, it depends on macro conditions. And, when they took me on the board and I became CEO like 4 years ago, a few years ago when I was put on the board, since then, the amount of turnaround the company has seen to now, you can kind of guess where we're going to be in another 5 years, aka hinting at extreme growth with him in the company. And he's also stating that there's no plan on him going anywhere as well, which is just great, right? These answers are pretty good. Now, they're a larger collectible business and they're a smaller business. They're a smaller business with less stores, but more of a larger collectible business now. And they're the most profitable the company has ever been. In fact, he says we are and will be profitable every single quarter now, which is huge for GameStop. So alongside their balance sheet and alongside the convertible bonds, which was talked about in the interview a little bit, they're going to be profitable every quarter, stacking cash. Now, Ryan Cohen won't lose money. He's buying when or if the time is right into Bitcoin. He was asked, listen, are you taking a little bit of a too passive approach? Are you buying more Bitcoin? Like, what are you doing? You have 9.6 billion in cash and assets. Ryan Cohen said, listen, man, GameStop is not going to lose money. That is it. We have a unique strategy, and when the time is right, we're going to invest. And the goal is we're not going to lose money. In fact, we can't, and we'll talk about that after. He was also asked about a dividend, which a lot of you guys probably want to know. And these are juicy questions already based off of the notes, right? And Ryan Cohen's answer was likely no dividend. Reason being, you have to pay tax on issuing dividends. And the goal is to might as well keep the money in the business. So he's saying there's no point to dish out the capital. We need to grow the capital, grow the business because it's not a short-term play. Now, it has to be the right time for investments and growth. And GameStop's growth may depend on how they deploy balance sheet than retail stores. Now, over the next 5 years, Ryan Cohen says, listen, it's important for timing. Growth equals timing. This is important. How they make their investments. And in fact, the company itself might more so rely on how they deploy the 9.6 billion in cash rather than how they make money off of their stores and collectibles and things like that. Now, so they're kind of like a Berkshire Hathaway sort of scenario. Now, if markets, Ryan Cohen also says, listen, if markets are down 20% tomorrow, GameStop will take the opportunity, right? We're looking everywhere. So he's looking everywhere for opportunity. And obviously they have more people in behind the scenes, not just Ryan Cohen, who are scanning the markets, crypto and stocks and other investments as well. And Ryan Cohen says that, listen, if there's the opportunity, GameStop's going to take it. Okay. So we really don't know the unique strategy, but we know shareholder value is key. That is what he says time and time again. Convertible notes. What the heck is going on with the convertible notes? Why did you do this? Are we going to keep doing this? That was a question to Ryan Cohen. Ryan Cohen said, listen, we're obviously going to borrow money at 0%. If you don't borrow money, if someone's willing to give you money at a 0%, you're dumb not to take it. And this is very important with what goes with his timing thing. He says it's timing. We have to be smart about our investments, because the only reason you shouldn't borrow money at a 0% interest rate is if you think you're going to lose that money. So if at any point they make the wrong investment or bad timing and they lose the money, then yeah, it was dumb to issue these convertible bonds, right? Because then they're in debt. GameStop investment was hated, and Ryan Cohen also didn't like that scummy stuff. In quotes, Ryan Cohen said shorts need to cover if things work out. He also said, in quotes, I don't have respect for short sellers betting on someone's downfall. Now, in the interview, Charles Payne asked Ryan Cohen about short selling within the company, and Ryan Cohen basically said, listen, way back when I invested, this was a passive investment for me. And GameStop, investing in GameStop was hated, right? If someone said you were investing in GameStop, they'd be like, why the hell are you investing in GameStop? And Ryan Cohen, didn't like that short sellers were betting on the downfall of the company. And in fact, he says that he does not have any respect for short sellers, and that if things work out, they're forced to cover. They're going to cover. So that is a trajectory, and it seems as if things are working out. And he also says, in quotes, I'm not scared of the short sellers. He says he's focusing on the business. I am not scared of the short sellers. GameStop isn't the investment for quick returns from day traders. A lot of people are stirring this up. And don't get me wrong, I understand where you're coming from. Hearing that Ryan Cohen isn't in it for a short squeeze is a little bit, aggravating to most of you guys, but in particular in the interview, you can't get it mixed up. In my opinion, he says that GameStop isn't the investment for quick returns from day traders. If you're day trading, you carry, extreme risk, or you're day trading or swing trading or very short-term time trading, you carry extreme risk and you could be burnt out. But this is more so like a Tesla sort of squeeze. Ryan Cohen also says, he was asked about, what do you think about these short sellers, these diamond hand holders who joined to fight the system, but not for GameStop as a fundamental company? Now, this is probably one of the most important questions that he could have been asked. What do you think about all of the retail shareholders, the loyal ones who basically saved the company, but to fight against the system, to fight against these scummy short sellers? Ryan Cohen says, listen, man, you're preaching to the choir. Okay. So he completely understands. In fact, he is one of us. And he says that it's a scam and it's all fucked up. That's what he says in his quotes. You'll hear the interview. Ryan Cohen realized also when he got taken onto the board. So his original investment in 2020 in GameStop was a passive investment, and then he got taken on the board. They wanted him on the board, and he said that once he joined and figured out what went on in those boardrooms, he realized that this is crazy. These people are doing not really much so for the company, but for themselves, and they're taking tons of compensation for it. And he basically realized that things had to be cleared out. So he came in, cleared out the boardroom. Now that everything's transitioned with Ryan Cohen as CEO, he has built a boardroom full of members that lots don't take any compensation and actually have personal investments into GameStop as a company. Now, that is the boardroom you want to be an investor in my opinion. Right? Nothing I say is financial advice. I'm not a financial advisor. Long story short, to cut off the last of the notes before I play the interview, Ryan Cohen said to Charles, I avoid mainstream media, but I like you, Charles. We need more people like you. Okay. He says that he avoids mainstream media. and you'll see why with the second interview. And then he also says, like, Charles Payne's a good guy. He likes Charles Payne, and he understands all the questions. He basically feels like he's one of us. And then shout out Chewy. Chewy was mentioned by Ryan Cohen, as many of you know. He came up with that business to compete with Amazon. He talks a little bit about that and stuff, and he's an entrepreneur and always has been. And these are the notes that I got from both of the interviews. Guys, like the video, enjoy both of these interviews. Let me know your thoughts in the comments section, and don't forget the top link in the description to join my Discord once the video is over, or you can go do it now and then come back and watch the interviews. Join up. Best vibes, best people, no bad questions. I post my trades, all that other stuff, and we have tons of alerts in there. Now, this was going to be a longer video. I had more stuff to talk about, but we'll talk about it tomorrow. Make sure to turn post notifications on. Enjoy these interviews. I love you all. Enjoy the rest of your weekend. God bless. Lottery stocks out.
Very much appreciated. Great conversation. Hey, good afternoon, everyone. I'm Charles Payne. This is Making Money. I'm going to pick up on that conversation because we're in the midst of what we call the fourth industrial revolution, right? And this is things that are written in stone, things that we think or take for granted, things that we believe will always be there, they won't be. Things are changing rapidly, but it's hard. The acceptance level is hard. It's hard for several people, several levels rather. The elites, it's hard because they lose their power. They lose a lot of their grip. They no longer control the narrative, and they no longer make all of the money. For the masses, it's tough because you change day-to-day routines. 9 years after the development of the first car, there was a movement to bring the horse and buggy back, right? They say, you know what, we tried this thing for a few years. I like my old horse and buggy. Obviously, that would have been a big mistake. So picking up on that conversation, look at where the market is right now. You got 11 sectors in the S&P 500. Only one is up, and almost the S&P is just only down fractionally, just that one sector, but it's technology. It's all about technology. It's all about where we're going as a nation. We are moving at the speed of light, at the speed of light. And there's a lot of companies and a lot of people are part of that. In fact, I wanted to share a story. Last month, and I'm sure most of you have heard this, right? During the frenzy of the midnight release of the much-anticipated Nintendo Switch 2, employees over at the Staten Island GameStop punctured holes in both the cardboard, the packaging, and the screens of the GameStop, right? As they were stapling on the receipts. This instantly became sort of a hot topic on social media. And then, of course, the CEO of GameStop came up with a brilliant idea. How about we turn this into a positive development? So on July 9th, the company began auctioning off what it's calling authentic relics of Staplegate. Right? And this is crazy. We're up almost to 300 bids on this thing, and the stapler, that's the infamous stapler, it's at $250,000. And here's the good news. All the proceeds will be donated to the Children's Miracle Hospital Network, or Network Hospital. All right, let me bring in now the brains behind this and so many other things. GameStop Chairman and CEO Ryan Cohen. Ryan, I got to just ask you, so someone calls you up and says, Ryan, someone at the Staten Island store is stapling holes in the screen. What were your first thoughts when you heard about this whole thing?
We got limited inventory, and they're damaging our limited inventory.
You thought about it like a shopkeeper. You didn't think about the public relations part of it, huh?
I thought about it as we got to get rid of them.
I got you. Well, I'm sure they're probably watching this show from a sofa somewhere. But I love how you turned this into something positive, right? Something uplifting. And let's be honest, your emergence as a CEO of GameStop has been uplifting. It's created a rock-solid groundswell of believers. And so what I did is so many of them reached out to me on X. I told them they could help me ask you the questions today. So this is what we're going to do. I'm going to get the first question to you. It's from a guest. He's one of my favorite guests. He's loaded up on your stock, Kip Herriage. And his question is, share your views on financial engineering in the GameStop way, and give us a snapshot of what GameStop will look like in 5 or 10 years. That's what everybody wants to know.
I don't have a crystal ball, but if you look at where the company was from when I joined the board in January of 2021, and a few $100 million of debt, losing hundreds of millions of dollars, to where the company is today, $9 billion of cash on the balance sheet, and the retail business is running profitably, then, if you may be able to extrapolate and see where we will be in the future, but time will tell. It depends on macro conditions, but we'll see what happens. But we've come a long way in a really short period of time.
You've come a very long way in a short period of time, but I think now everyone's kind of thinking the catalyst, right? A month ago, I took my granddaughter to the American Dream Mall in New Jersey, and it was pretty much empty, except we came up on this one store. It's called Pop Mart. And I mean, it was just brimming with business. These kids were everywhere, and they're doing the collectibles, and they're doing all of this stuff. And I'm thinking, I thought about you. I thought about GameStop immediately. Now, how do you tap into something like that?
I mean, we've moved the business from a big reliance on hardware and software to collectibles, and so we're selling a ton of trading cards, both sports and TCG, and it's a much more durable business. It's not as cyclical as hardware, which, as you know, it's hit driven. The software business, hardware is every 6 to 7 years, and it's TBD in terms of the future of hardware. So we've got a much larger collectibles business today, and generally the business is much more efficient. It's going to be a smaller, less stores, but more profitable company. And most importantly, we're generating profits every single quarter now. So typically in the past, GameStop's only made money in Q3 and in Q4, and actually, when I joined the board and before I joined the board, GameStop was losing money every single year. I mean, it's hard to appreciate what a piece of crap the business was when I joined the board and what was going on in the boardroom and management. But we're making progress.
Yeah, I actually used to use this as a cautionary tale on a company buying back stock and rewarding CEOs with big bonuses while the company was itself failing. So you're absolutely right about the crappy part of it. Let me ask you about these earnings, the last earnings release. It's really, to me, it was pretty evident when the number came out. Everyone was focused on Bitcoin. Right, and everyone thought you would, because you had so much money, that you would have bought more Bitcoin. What's the Bitcoin part of the strategy here?
I look at it as a hedge against inflation, a hedge against global money printing. We've already made an investment, and we'll see. It depends on the price. So I don't want to lose money. That's the most important thing. And something could be a really intelligent investment at one price, and it could be totally idiotic at another price. So I haven't called our shots, but we may buy more Bitcoin, or we may not buy more Bitcoin. We'll see what happens.
So it's part of the strategy. Then it's an anti-inflation. It's a hedge against inflation. But if it's the right price, you also see it as an opportunity.
Yeah.
So so you're sitting on $9 billion. I want to share one of the posts we got on X because people are saying, okay, it's a lot of cash, and some want to see you put it to work. One question is, would you consider a dividend or even a special one-time dividend?
The thing with the dividend is you got to pay tax, and so I look at it as I own just over 8% of the company, and granted, we better not do something foolish. But if we don't do something foolish, then better off keeping the money in the company and looking for the right opportunity than going and paying a dividend and paying taxes.
You're speaking of looking for these opportunities. Are you? Because it feels you did the hardest part. You cleaned up a business that was awful, but this next leg up. Are you being too cautious? Folks want to know, where are you looking? Where's the magic coming from, the Ryan Cohen magic? Where exactly is that going to come from? Because it's not going to fall in your lap.
It has to be the right time. We are in a position today where the retail business is profitable. Maybe the future value, when you think about GameStop, has more to do. Again, this is a guess, but it may have more to do with how we deploy our balance sheet than the cash that the retail operations will generate. But it needs to be the right time, and the capital markets are funny. They can go and this happens every 5 or 10 years. They can go from green to red, and they don't flash yellow. And so, there may be an opportunity tomorrow. You never know. I mean, we could wake up tomorrow and the markets can be down 20%, and GameStop will be in a position to take advantage of those opportunities when they happen. But
I got you.
We'll look everywhere.
Okay. Yeah, listen, that's how we all do our own individual portfolios as well. I want to ask you about shareholder value. And someone said, hey, what about these convertible notes and the dilution that comes with them? Why does GameStop keep doing them? And how does this add to shareholder value?
Well, they only converted a premium. And so, we've done these convertible notes at a 30% plus premium. And essentially, we're borrowing money at 0%. We're giving a conversion right at 30% plus. So if someone's willing to lend you money at 0%, then it'd be pretty foolish not to take that money, as long as we don't do something stupid with it.
Right. So obviously, we got to talk about short selling. Short selling in GameStop has been legendary. At one point, it probably was valid, considering, again, past management. Just about everyone's asking about three things when it comes to this. First of all, why GameStop? And do you see any form of illegal synthetic shares or whatever it might be, illegal shorting? And what are you doing to fight back against this?
Even from when I made my original investment, I was fascinated at how much hatred there was towards an investment in GameStop. It was one of those things where, you would tell someone, invested in GameStop, and they'd be like, what? What are you invested in GameStop for? And so there's always been a lot of people on the other side of the trade, and I have my own personal views on it. I think that it's un-American to bet against business, but it's a free market. If you want to be on the other side, no problem. And if things work out, then those shorts ultimately need a cover, and that could ultimately be a good thing. So I don't think it's all bad. I don't really have much respect for short sellers, and someone who's ultimately not smart enough to find someone successful, they have to bet on someone's failure. But if things work out, then they got to cover. So let them short.
Yeah, and I also, to be honest with you, the shorts out there, particularly the large organized shorts, they've always had a platform on financial media. So they built these big short positions. Then they go out and bash the companies, which I always thought was sort of unfair as well. Have you looked into any illegal activity with respect to the shorts, the sort of synthetic shares, or anything out there where, a lot of your shareholders are concerned that these shorts never seem to run out of stocks, define these stocks as short?
I'm not scared of the short sellers.
Okay.
They can short the stock. It's okay.
All right. Hey, let's talk about
I'm spending my time on the actual business. Ultimately, the stock will take care of itself. It's really focusing on the business. And frankly, if people are in GameStop and they're looking to make a quick buck, then that's not the investment for them. You should invest in any investment for the long term. If you're day trading, then you take all kinds of risks.
Well, I think by now you know that a large portion of your shareholders are not day trading. They're what we call diamond hands. They believe, and their belief. They believed in initially, I think, to fight the system. To your point, they saw the same hatred that you saw. This hatred from the financial media, this hatred from Wall Street, this hatred from the elites who've looked down on them. They've looked down on small companies, and they've been able to stomp and trample over these people from the beginning of time. So GameStop became sort of this symbol, right? This symbol of fighting back. And people bought into it, right? I bought shares because I wanted to partner with them, not because I believed in GameStop. This is before you even came on board, but because I love to fight back this nation. That's how this country was born. That's why America's the greatest country in the world. So you've got folks who are in there with you. They're in the trenches with you. They are diamond hands, and I'm glad you're on the show today to help share your ideas and your vision, because that's all they really want. words of encouragement, to understand what's going on with the company, to understand what the game plan is. So that's why I'm really happy that you're doing this right now for them.
You're preaching to the choir. I mean, look, it's all, pardon my French, it's all a scam. It's all fucked up. You look at private equity, you look at venture capital, you look at all of these pools of capital, which really exploded since the financial crisis, and it's all perverse financial incentives. They don't give a shit whether they make money or not for their LPs. They're getting management fees. So they want to deploy the capital as quick as possible, and they're great at sales, and they're making if the business does well. So that was the setup of the trade. You basically had all of these elites, fancy hedge funds and private equity and everyone else who knows who is shorting the stock, and then you had myself as a retail trader, and you had a bunch of other retail traders on the other side of the trade.
Yeah, and to your point, I point this out at least once a week, probably more often, since 2009, how everything has changed. The financialization of our nation, where money just creates money, and it's all about gimmicks and product, and instead of real, true innovation and hard work. And that brings me to something I just want to get you to share a little bit, Ryan. Just your own personal background, your own personal success story, because I think it's really something that can motivate a lot of people.
Where do you want me to start?
Well, we've got about a 5-minute window, so you decide.
I built this pet food company. Someone, I had an idea to sell 30-pound bags of dog food in the mail, and we ended up going head-to-head against Amazon, built a bunch of big warehouses, and ultimately ended up delivering a really high-touch, better experience focused on the pet category. And I've always been an entrepreneur. I learned from the best. My father never went to college. And thank God, by the way, if you look at what's going on now in the colleges today. So that's a competitive advantage, too, as far as I'm concerned. But I've always been an entrepreneur, and I invested in GameStop originally as a passive investment, actually. And as I engaged with the board, they had originally reached out to me to join, and they offered me a single board seat. And I was, ultimately just be a patsy, one of whatever 10 or a dozen people on the board. And as I really got an understanding for what goes on in these corporate boardrooms where you've got these board members that are collecting, I think on average, like $350,000 a year, the average board director makes in the S&P 500 just to serve on a board and to do absolutely no work. And so as I saw what was going on, and everything was in the name of corporate governance, there was nothing about the business or shareholders or anything like that, I felt like I needed to file a 13D and really just clean out the boardroom. And so today we've got a much smaller board, and we've got a significant portion of our board that's invested in the company with their own money, and there's no compensation. And we'll see what happens with GameStop. Hopefully things work out well.
Well, I can tell you, hopefully, everyone's hopeful, but I tell you, just listening to you and knowing your background and just knowing who you are, we feel pretty good and pretty confident that things will work out. Just have to have the right patience. Ryan, I really appreciate you coming on. Thank you very much, and much success to you.
Charles, I want to say that, I don't do much with the mainstream media, but, I know we've spoken in the past, and I like you. You're a good guy. So we need more people like you in the mainstream media.
Thank you very much. I appreciate that. Thanks, Ryan.
All right. Good to see you.
See you soon. All right, folks. In the meantime,
welcome back to Squawk Box. The infamous GameStop stapler that damaged the Nintendo Switch, starting what has been dubbed the Staplegate, has now hit the auction block, and for a good cause. This morning, we are talking to GameStop CEO Ryan Cohen, who's a little bit behind some of this. Ryan, great to see you. It's been a while. I have about a million questions about what's going on with GameStop and your investments and everything else, but let's start with the stapler. It's up to what, $250,000 right now?
Yes.
So what?
So we had our store in Staten Island on launch day, and the store manager took the stapler and stapled it into the switch. So we damaged the switch, we refurbished it, and now we're auctioning off the stapler, the switch, and the actual, and the basically it turned into a collectible. So it's right now $250,000. I'd originally said 6 figures. I'm going to throw in my underwear. We've surpassed that, obviously. And now 7 figures. If we get the 7 figures, I'll personally deliver the underwear in Miami, and we'll take a trip to McDonald's together.
Your dirty underwear?
Do you believe the underwear is going to advance the price? And are you going to sign the underwear?
I will sign the underwear. Whether it will advance the price or not, I'm not sure. We'll see.
And just so we're clear, is this you said a trip to? Is a trip to Miami, or they got to pick it up in Miami where you live?
I will fly them to Miami, and McDonald's is on me.
And McDonald's, how much stuff can they get at McDonald's?
Whatever they want.
Wow, I mean that I could order a lot at McDonald's. I don't know if I could get up to the price though. Before we even go farther, who do you think is bidding on this?
I don't know.
Are you, though, fascinated by this sort of fascination with GameStop and with you? I mean, the fact that people would want your underwear? I don't do a lot of interviews where I ask about the underwear, Ryan.
It's a nice underwear.
What kind?
Don't tell me the kind that has those little holders.
No. Okay, let's move on.
Only the winner is going to find out.
Only the winner is going to find out.
What are those called?
Ryan, let's talk about where GameStop sits right now, and in terms of just where you are on the journey. And I mean, I remember talking to you a million years ago, obviously during the sort of GameStop frenzy. But where are you from then to now?
We're a much more profitable business, smaller business, less stores, very strong balance sheet. We are, we've gotten our costs under control, and we've changed the business from a reliance on hardware and software to a significant focus on trading cards and collectibles generally.
And where?
Yeah.
And how do you think about crypto in the middle of all that?
We made an investment of just over $500 million into Bitcoin, and I look at it as a hedge against inflation and global money printing, and we'll see what happens. But
how much should people who are investing in GameStop think of you as some kind of like portfolio of assets and maybe even like a mini micro strategy or something?
No, I mean, we have our own unique strategy, and we have a very strong balance sheet, over $9 billion of cash and marketable securities. And we will deploy that capital responsibly as I would my own capital, and only look for opportunities where the downside is limited and there's a lot of upside. So we'll be opportunistic when we see those opportunities.
Well, I'm curious what you think of your shareholder base these days, again, because I think so many people think about the shareholders during what was this GameStop frenzy, and just your ability to take to X or social media and get people, as I said, excited about what you're doing and how you think about that. It's very unusual. Well, it's just unusual. I mean, you and maybe Elon Musk, and I don't know if I should put you in the same category, but have sort of a very special ability to have this sort of fan following that's sort of very unusual. You can post an emoji of something and people go crazy.
We have a loyal shareholder base, clearly. I don't think there's many situations of public companies where the CEO receives absolutely no compensation and is, you can never be completely aligned with common shareholders because everyone has a different cost basis and has a different time horizon, but I don't get compensated. I've invested my own personal capital. I don't have any perverse incentives, and the goal is to maximize shareholder value. So, you see these public companies where you've got executives and they're collecting tens of millions of dollars or hundreds of millions of dollars in risk-free compensation, and frankly, it's despicable. And so that's not the way that I run GameStop.
I actually have a broader question about investors, since I think you have an unusual relationship with them. We've been talking on the broadcast for the past couple of weeks about this push towards folks who are tokenizing effectively private companies, shares in private companies, to what might be described as unaccredited investors, so people who have less than $1 million. There's a big argument being made that we need to democratize investing, that the real opportunities are in private investments, and that these sort of derivative instruments are a great opportunity. There's other people who say this is crazy and we have regulations for a reason, and for some reason they're not being applied or at least listened to in this context. What do you think about all of that?
I don't have much of an opinion on it. I haven't looked into it, so
the reason
I have
I
nothing
ask
intelligent to say on the topic.
Okay. No, the reason I ask is more just about sort of the opportunity set for traders today, and sort of the opportunity to make money in these unusual, I don't know if they're unusual, but different ways, and this idea of democratizing investing, which I think a lot of people look to what you've done and think that this is about democratizing opportunity.
I think that there's a lot of risk in investing, period, especially in individual securities. And I don't give out investing advice. And I've always said the best thing to do for most people is to invest in low-cost ETFs. And you can lose a lot of money investing, and you have to have the right temperament for it. So it's for the very few. But in terms of people being allowed to invest in whatever the hell they want, people should be allowed to invest whatever the hell they want, and they take on those risks. And that's generally my point of view, but understand that it comes with significant risk and volatility, and you got to have the right temperament and do your own diligence.
Are you still a passive investor in Apple and Netflix and I think Wells Fargo at one point?
Yeah.
And what's your take?
In Apple and in Wells Fargo.
So in terms of Apple, obviously there's been a lot of questions about Apple and AI and where they sit in terms of the stack relative to so many other players. Do you look at that as a value play at this point? Do you think it's oversold? What's your take?
I think it's the strongest brand in the world. You look around you, everyone is glued to their iPhones and people aren't switching devices. They can do a much better job in artificial intelligence. There's no question. Siri is the same thing that it was 10 or 15 years ago. And, there's definitely an opportunity for them to improve in AI, but they own the ecosystem, and they've got a very strong, enviable business.
Do you think they need to be super strong in AI, or that can just be a layer from somebody else on top?
Only if they can make money.
You mean only if they can make money from the hardware part, or you're saying only if they can make money from folks who are paying them to be the layer on top?
it's not clear who the winners in AI is going to be ultimately. You look today, ChatGPT is clearly number one, but we'll see if they can ultimately develop a real mode in AI, or ultimately once everyone's models are at the same level, how much pricing model there will be between the different languages and the different models is TBD. So I think everyone's trying to figure out long term, how do you monetize AI? There's no question AI is incredibly disruptive, but who the long term winners are going to be is I don't have a point of view at this point on who's going to be able to ultimately create a durable competitive advantage in the space.
You do have a lot of money in Alibaba, so I imagine you think that they have a credible claim in the AI world.
We're supposed to be talking about GameStop. We're supposed to be talking about GameStop.
I'm just curious where you land. Well, let me ask you, in terms of trading cards, maybe it goes to crypto and trading cards. Do you think that crypto and trading cards ever go together in some kind of digital way that we don't know about?
It could. There's opportunities there.
Give me a little more.
We'll see. We'll see what happens. But there's opportunities.
Can you tell us about those opportunities in terms of just how to think about it for the investors or even the customers of GameStop right now? Like what to expect?
There's an opportunity to buy trading cards and to do so using cryptocurrency. So we'll see how much there is on the actual demand side for that kind of product. But there's definitely an opportunity to actually use crypto in the space, and the utility of crypto beyond and investing is a hedge against inflation. I think that so far that's been the biggest demand for crypto, and so the ability to actually use crypto within transactions is something that is an opportunity, and it's something that we're looking at.
Is that stable coins? Is that Ethereum? Or are you thinking people are going to actually use Bitcoin to pay for things?
We're going to look at all cryptocurrencies.
Okay. Ryan, we're going to leave it there. We appreciate it. We wish you lots of luck today with this big auction. We hope that you make a lot of money for charity. And if somebody wants the stapler and the underwear and McDonald's, you can go out and get it this morning.
Are you going to place a bet?
Well, you might have priced me out already because we're at what are we at, 250? It might be going up as we're talking. So I don't, if it had been at 250, I think that would have been a steal. 249, 700. But,
it's not too late. You've got about a day left.
I got a day left. I may do a GoFundMe page to see if I can maybe crowdsource some money to put together for our